Hello and welcome. In this session, as you see on your screen, you have a CMA Part 2 Section A. We're gonna cover financial statements analysis. I'm not gonna go deep into the financial statements as we covered earlier or in a Part 1 workshop as well. You're gonna look toward how do we analyze the financial statements? What are the financial ratios? These should be the main questions. How do we work on our financial ratios? That's the second main question. How these look towards my decision making? That's third main question. By the way, financial statement analysis is 20% of your exam. I think, and what you should think, that it is a main objective, you are a main core part of your exam. You have a financial statements and its analysis. If we look forwardly, you have some topics that are mandatory part of your section A. You have an income, how you measure the income, how incomes have been related. That means your financials. Then you look toward the verticals analysis and then horizontal analysis. If I see towards my vertical and horizontal analysis, how the things gonna relate. Vertical analysis means respective percentage of on the base, as such as on a balance sheet, there's a total asset base and then there's a total equity and liability base. On horizontal analysis, I'll have year-over-year base comparison towards my base values. Similar way goes towards my income statement, vertical and horizontal analysis, how these things gonna relate towards each other. We will be looking toward the ratios analysis, my profitability ratios, furtherly ratios, returns ratios, and then there are some special issues. First issue is foreign currency issue. Then there's another issue of an inflation impact on my financial statements. We look toward changing accounting policies, principles, and estimates. There are some changing in errors. IS 8, it's an international accounting standards. If I look towards my foreign currency, there's an IS 21, foreign currency issues, etc. And my profitability ratio and other ratios are being the part of my financial analysis. US GAAP and IFRS have some common issues and there are some little bit differences. These differences relates towards my workings, my book values and the market values. Here I look towards my accounting and economic profits, how these relate towards each other. First of all, these are the list of our ratios. If I will not be going at a ratios position till now, because I need you to see the financials first. Here are the financials available. You look towards your income statement. At the top, you have actuals and the projected income statement or a profit and loss statement. You have a revenue, gross revenue, you less your freight or warehouse cost. You go towards the net revenues. You have a cost of sales. You look towards your expenses. I have clubbed my expenses as selling, general, and admin expenses, then total cost, then there are some adjustments. Side by side, there would be questionings in your mind that where's my gross revenue? Yes, I know that there's no gross revenue or profit, sorry, not a revenue, there's no gross profit. Then there should be the list of an expenses. Yes, at the time there's no list of an expenses. I have some adjustments about gains and losses on a disposals, on a currency exchange, or whatever I need to see. Then I got my beta. It means earning before interest, tax, depreciation, and amortization. I have my depreciation. While depreciations are being prepared according to the schedules being available, then I got my EBIT results, earning before interest and taxes. I have my interest expenses available, EBTs, earning before taxes, then my taxes calculations, current tax, my current year taxes, deferred tax if there was an adjustment from a prior or a previous year's taxes, or if any future income taxes are gonna relate those as well. And at the last, I got towards my net incomes, my margins, As you can see, the margins have been calculated at a below. It has been looked towards a better position or an image of my income statement. I'll be showing you another type of an income statement in just a moment. Then I have my cash flow statement. My cash flow statement has three main elements. It has my operating activities, means the core activities of a business, my investing activities, how much my business invests, or my business gets buyback from its activities. Then financing activities, how the capital structure of my business has been structured, whether there are repayments of a shares, whether there are repayments of a debt, whether I buy back my shares or not. There's a question of a dividend. That dividend should be the part of my operating activities, or the dividend should be the part of my financing activities. This being a long debate on a dividend position, it should be the part of my operating as well as my financing. I'll be looking on the deep digger between the cash positions. I have my cash balance, cash movement during the year, then my beginning cash and my ending cash balance. How this thing relates towards my further workings. As I look towards my investing, as I said, my company invests in a capital expenditures or some investing other activities, the cash should be looked forward. It shows the cash movement. Here comes the balance sheet, ultimate position where my company is standing. So I have my assets as the first, my current assets, it includes my cash balance. This cash balance comes from my cash flow statement, then my account receivables, I have my inventories, my prepaid expenses, my other current assets, and then I got my total current assets. You can place there's some adjustments, placement of my financials that my property management or a long-term assets or a non-current tangible assets should be placed first, then intangible assets. At a last, I got a list of my current assets. It's up to you the way of presentation and explanation to your management. Then you have a liabilities and equities. In a liability, I have my some other current liabilities, my very important debt revolver, my account payables, looking towards my deferred income taxes, as these were the part of my income statement as well. I have my senior secured term debt as well, and looking towards my closing non-current liabilities. I have my common share issues, my retained earnings. These should be the part of my equity balance. My total equity and liabilities. Then you can see at a below there's a balance sheet check. I check towards my interest payments, looking towards my debt acquisition, and that has been a valued upward. These are just the three statements, and these are the requirement of a financial. For financial analysis or a financial statement analysis, these three statements are very important to search. I have looked towards my income statement, then balance sheet or the cash flows. These three are the major statements. You can see the margins available, but these are just limited. And then next, you can see a tab on depreciation. The workings on the depreciation available. It's it's being a waterfall chart. Then I have a tax expense. I have my working capital detail, my current assets, and my current liabilities. There's a net balance in the working capital, and then I got to see my changes in working capital. That is ultimate part of my operating cash flows, as operating cash flow refers towards my day-to-day operations and my cash flow workings. Then I look towards my debt working, my debt and interest issues. My revolver of a debt is being a part of my cash flows, and how these things gonna relate towards my free cash flows working, free cash flows moving, and then you should be learning it. I have my equity portion. Equity relates to my shareholder equities, how much my shares have been outstanding, the amounts of my shareholders, my dividend payments, dividend ratios, my net incomes, and how these gonna relate towards my retained earnings. As dividend is a negative retained earning part, I got to see my net incomes, then amount outstanding balances of a retained earning. I got to see my opening and ending balance reconciling. Reconciling means the movement between my parts, whether it should be the opening and the ending, or it should be the ending or the opening. Everything should relate towards each other. Then I have my covenants working. I look towards my EBITDA workings. My net debt, it lists my cash balances. I look towards my interest expense or a finance cost during the year. My total bank capitalization should be the part as well. Here towards my tax, I got to see my taxation workings, my accounting profit, or you can say taxes profit, EBT. Starting from that, I look towards my 10 timing differences for my deferred tax calculations. As you can see, my income taxes on a current assets, or you can say the net income or the net profits, that is being the part of my tax rate and my EBT approved by the government. These should relate towards each other. They should be the matching point. Let me see whether yes, there's being a part. I have my financial statements. Then depreciations I explained furtherly. Here is my cost of sales. Now you look towards that. My cost includes variable costs, my raw material purchases. Then there are some utilities. This include towards my variable cost workings. There is a fixed cost. It includes my rent balances, my operating labor. Then my other fixed costs and the total fixed cost relates towards it. My total cost per unit I got it balances that you can see how it relates towards each other. I have two key gonna relating my total cost. Add this was the cost per unit working. Add a below can see further thing. You can see that annual cost volumes. My cost has been looking forwardly. My annual sales volume is being related towards my revenue schedule. Where is my revenue schedule? That have been posted in a separate sheet as we are looking towards my horizontal approach of working. This relates towards my costing inflations, and then I got to see my total cost. As my total cost is being a pair of my variable cost as well as my fixed cost. Variable costs include three main elements or whatever the elements you can see. As a manufacturing company, there should be the list of costs available. There should be the list of expenses available. My cost, it should be the part of my raw materials. Then I look forwardly towards my utilities. I have my further fixed cost. It is the rent proportions, my operating labor cost, some fixed cost. I got to see total fixed cost, my total fixed cost, and then my total cost of sales. This is the part of a combination of a variable cost as well as my fixed cost. My revenue schedules go same. I
Hello,
got
sir.
to just wait for a second. Yes, you just call in and now I'm open for answering. Mr. Abubakar, you have a question? You can ask me.
No, no, sir.
Alright, thanks a lot. There's my revenue workings, separately preparing my revenue schedules. This is just a basic schedule appears at the front of you. Then there is a list of revenues, list of you can say elements for my revenue analysis. If you have any question till now, you can ask me how these things gonna relate, and you can see that this has to be related towards each workings. and how these things gonna relate it. Similar way goes towards my scenario cases. I look towards my base case, my best case, and some other cases. My cost inflation, my price increases. Similar way, my sale price and the sale volumes increases. These all relates towards my workings, and then how can I relate these things in my case study? It's always been available. You look towards the scenarios, and these scenarios helps towards you building financial statements or a financial model, and helps you to look towards your forecasted financial model as well. There's a list of assumptions as well and how these can be related. These were just some basics of financials and how these gonna be related towards it. I'm gonna look towards further working, deep digging into my ratios. Let us go towards my book and how a book is available. Now you can see I have a section A, it's being a part as a financial statement analysis. You can see it says introduction towards financial statement analysis sections, FSA. It says my FSA comprises 20% of a CM exam. See that it is very importantly. These exams portion are very important. You need to understand the key element. If I look towards measure of income, starting from comparative financial statement analysis, you can see that at a first there's been explanation of a measure of an income. I'm being measuring my income. I have my EBIT working, earning before interest and taxes. It says earning before interest and taxes related towards it. I'm gonna highlight it for you. Then my earning before taxes are very important subtotals, are very important frequency term in the financial statement. These are very important for my analysis. I have my income statement working. You have an income statement standard format available in the front of you. You have your revenues, you look toward cost of goods sold, then gross profit, you're selling general and admin expenses, and you got towards operating income. Operating income means your income generated from your core activities. You have some interest and dividend incomes. It look towards your non-operating incomes. You have some interest expenses, or you can say finance expenses. By the way, as we are looking toward the furtherly US GAAP, there are some differences on my, you can say, IFRS as well as my US GAAP working. If I type here, it says US GAAP versus my IFRS workings. All these things are majorly point of differentiation between financials. In the US, you prepare a different type of financials, and there are some different rules than your IFRS is working. If you look towards different things, how these relate towards each other, you got to see income from continuing operations. I'm gonna underline those for you. It relates towards income from continued operation. Just wait for a second. Then I got towards my provision of an income taxes. There have been provision of an income taxes of a continuing operations. Continuing operations means my company is being working. Whatever I generate first, that should be related first. Income from continuing operation. I have my discontinued operation. If a segment, if a business reporting segment have been discontinued, if my business reporting segment have been disposed of, that should be the part of my income statement. You see in the front, it is being available, it is being discussed onto the face of my financials. You saw, you see towards your discounted operations working, you have a gains or losses on operations of a discounted component. Component means your business segment. Highlight, let me add some text. Business segment, and then if I type furtherly working for you, it is IFRS 5 workings, income from discontinued operations, or whatever I need to see it. Here you see a discontinued component and its related workings. Then you got to see gain or loss on disposal. You sold your asset or a business segment and then you relate towards it. Just wait for a second who are being entering. We were learning for the financials. My profits or loss during the year segment earned furtherly explanation towards my income taxes expense. There are some income tax benefits as well. And then I look towards another subtotal, and that should be the part of my financials as well. At the end, I got towards my net income. At the below, you can see there's a note, and that note is being very important, a point of a discussion. It says there is an income from continuing operation. I agree that income from a continuing operation on a multi-step income statement is not the same thing as operating income. Yes, you need to understand that your operating income is something else. It is an income that has been generated on a core activities. mean that income from continuing operations. By the way, this is a multi-step income statement which includes all of your subtotals. Furtherly, it explains that what is operating income. My operating income includes revenues and expenses generated by the company's core business. I already explained you. It explains operating income does not include financial incomes. It means, let me underline off for you, it doesn't include my finance cost, or you can say financial incomes. By the way, you can see the finance cost is also called financial expense or interest expense. It says furtherly, nor it does not include my non operating gains and losses or the provisions of an income taxes on continuing operations. It includes something that relates to my working, and that is being the major part of my workings. It says furtherly, my income from continuing operations, on the other hand, does include financial income, financial expense, non-operating gains and losses, and income taxes on a continuing operation in addition to revenues and expenses generated by companies' core activities. It further first it explains that my company earns revenue and the sales or expenses. Yes, my revenues and expenses are a part of my operating income. That means it is being generating my day-to-day operation profits, my day-to-day sales and related costs. What's the next? It says my income from continuing operation. It include following thing. It include my revenue as well as my expenses. It furtherly include my interest incomes. It furtherly include my dividend income. It furtherly include my interest expense or a financial expense. Then it look towards my some gains and losses. Those gains and losses are non-operating gains and losses. And then I got towards my income from continuing operations before taxes. You need to understand that there is a provision of a tax as well. It is being the major part of my taxes. It explains you provision for the income tax means current tax or a deferred tax. You're working towards IFRS, then you would be learning or you would be working under IS 12. And if you have some other workings such as US GAAP, then you should be looking towards some taxes working. Well, I am not deep digging into my financial statements because it's been the part of my part one exam. Income from continuing operations. I got it. Then my discontinued operations furtherly working. It says further, my income from continuing operation, it refers toward gains or losses that a company generates on all its activities that are expected to continue in the future. All right, I understand. Let's wait. It explains my company is generating something, all right, and it is being generated on its activities. That means it is working. My company business is working in a current and a future position that relate towards my income from continuing operations. It is called income from continuing operation to distinguish it from gains and losses on a discontinued operation. Yes, you have some differences that if you look towards some gains and losses on your business segments, that is being the part of your discontinued operations. While if you earn some other gains and losses, that would be the part of your income from non continuing operation, means non operating gains and losses. Losses on dispose of your assets, on dispose of some investments, that would be the part of your non operating gains and losses. You need to see the difference between both of these things. How you relate things and how these things are effectively working. It says income from continuing operation does not include my income from discontinued operations, because income from discontinued operation represents income or losses I already been explained that are not to be expected to continue in the future. Yes, I am selling my business segment and that business segment wouldn't be working in a future for my organization. A potential investor or a lender in a company, it should be looking towards the things, how these things relates. My investor would be looking towards company's financials, and what would it be the major part, it will be looking towards company's income from continuing operations. Then it look towards further things, my revenues, my cost of goods sold, my gross profits, my expenses. If my investor is looking, it wouldn't be looking towards my net income. The line results of discontinued operation. Another important thing that you need to understand that if your company is selling an operation is selling a business segment, then you should report another subtotal called income from continuing operations or income from discontinued operations. If your segment is not being selling, if your segment hasn't loaded any segment gain or loss, then your subtotal should be differentiated. You need to see and understand these things. I'll be back in a call. Another point you need to understand, I'm just back. Another point you need to understand that your income from continuing operations, or you can say your operating income. While I'm just making an assumption, there's been a case, you can say, uh, let me operating income equals my income from continuing operations. So this means that my these both operating income and my continuing operation income are being just equal. There is no interest and dividend incomes. You need to see these things very deeply. In the case I'm been explaining to you, let me place it being a case where my operating income equals towards my income from continuing operation or continuous operation. Then this means that my organization is moving towards sustainable growth. It is sustainable growth that my organization look towards my expenses cutting, my revenues increasing, looking into the deeply towards my cost of goods sold, looking towards my deep expenses furtherly, and how these things relate towards my working. It's being a part of your financial, it being a part of your financial analysis. How you learn towards your operating income. As you see, there's being mentioned that earning before interest and taxes, earning before taxes, how these are being differentiated and how these are being defined. You need to understand these small differences for your exam preparation. At the end, you got to see your net income that is being the part. It says further thing. Earning before interest and tax, EBIT is not same as operating income. Alright, I agree. Though in some cases it may be same. All right. There's some similarities and some differences. It explains as an EBIT, it does not appear on standard. So there's being a comparison. There's being a US and IFRS difference. That in a US, you're not gonna show a standard version of your financials that include EBIT. While in IFRS, you are going to show deeply your financials starting from revenues towards your gross profit, then it moves towards your operating expenses and your EBITDA. How your EBITDA relates towards your EBIT, it has been explained or reconciled there. It is further explaining multi-step income statement is being calculated and it has been used for analysis. Earning before interest and tax, it is equivalent to net income adjusted back any deduction for interest expense or any deduction of for taxes. Now, it explains that my net income and my EBIT are being equals. It's being related to my US GAAP working, beginning with my operating income. It is being calculated as below. You can see it. My operating income, then my income from other operations, or you can say interest income, dividend incomes are being added. Then there are some gains and losses. Losses are being subtracted. My gains and losses from operations or discontinued operations, again, my business segment reporting workings, and then earning before interest and tax. There are some major differences. You need to keep these differences in the mind if you're working for a US GAAP or a US firms. It says operating income does not include interest and dividend income. Your core activities, your core activities profit, operating income. It doesn't include your interest payments, interest receipts. It doesn't include your dividend receipts. Those are being a part of a separate thing, and that relates towards your income from continuing operations. Next, it says, whereas your EBIT includes interest and dividend income, it being a small difference, then it further explains, my operating income, it doesn't include my non-operating gains and losses on acquisition or investments, whereas my EBIT, it includes my non-operating gains and losses on acquisition. These are the three major points you need to understand those. Third, very important point, my operating income does not include pre-tax gains and losses on discontinued operations, whereas EBIT does include pre-tax gains and losses. Yes, in your IFRS workings, when you sell your business operations, that is being a part of your EBIT calculations. Whereas in your US GAAP, you don't want to relate those in your operating income part. These are the notes very important for you. However, if you are following the Hook material, as we are the official partners of Hook in Pakistan, of finance consultancy. So I hope you're gonna learn very much from us. Note number one, it explains you non-operating gains and losses, interest and dividend income we earned on investments are excluded from EBIT if my analyst looks. However, interest income earned on credit extended towards customer should always be included into the EBIT. This means I am giving loan facility to my receivables. Receivables took sale from me. That's why they are being the part of my financials. All right, we agree. Next, receivables are also the part of my EBIT balance. What I mean to say that I gave them a loan to purchase goods from me. Exam tip. Although operating income and EBIT are not the same thing, they may be used interchangeably, even on exam under the assumption that income statement contains no gains and losses on my investments or acquisition. There is no dividend income, no interest income, no further gains and losses on my discontinued operation. Very important point for your exam. Now you see how you relate towards your EBIT, EBT workings. You relate your earning before taxes, how these are related towards each other. It says very importantly, add up briefly, you minus or you deduct your interest from EBT, EBIT. Here is being a format available in the front of you. There has been some entry. Let me see it. Now I'm gonna look towards my comparative financial analysis. Why do we compare my financials? How these financial analysis are being compared? Why these are being important part or a component of my financials? I need to see that it says one of the main difficulties, my company is being analyzing my financials from period to period, or if my company is relating any differences, if my company look towards different things, how these things have been working and relating to it, you need to understand that. You compare your financials from 1 year to year. You compare your financials with other companies to get a better decision. You look towards your informed decisions. First of all, you have your company comparing for the two companies. One company would be getting a higher return on investment, while other company would be getting a less return on investment. You need to see it further things, whether their both capital structure is the same, whether they both earn a better income for the year, whether their previous financials are being same. There are very questions for your comparative financial analysis. You need to understand these questions in a deeply. As you know, there are the two major types of your comparative financial statement analysis. First of all, you have a vertical financial statement analysis, and then you have a horizontal financial statement analysis. You also called common size financial statement analysis, financial statements onto your working or towards your vertical analysis. You look towards your performance of an organization during a time period. You look towards a comparison of a performance of both organizations. Secondly, you look towards your horizontal or a timely calculation or a trend analysis. This is also called common base year analysis. Now you see there are multiple names for your analysis. You have a vertical analysis as well. You have a horizontal analysis as well. Another name for vertical, it's a common size financial statements analysis. Secondly, for horizontal analysis, you can also call the trend analysis, or you can call a year over year analysis. You can also call a common base year statements analysis. There are multiple names of your financial analysis. I have some workings for my vertical analysis. Then there are workings for my horizontal analysis. Here you can see an example. It has been performed by your study provider for a vertical, or you can say a common size financial analysis. It says following a balance sheet and an income statement. All right, these are the actual numbers in a first year column, and you have common size vertical in a second column. Each individual balance sheet item, it has been divided by the total assets. So they have been explaining you how you are performing your vertical analysis. You explain your each line item as a part of your balance of an asset balance. Then each line item of your income statement, it is to be divided by your total net revenue. You need to understand that, not your gross revenue. It has to be divided by your net revenue. Then this should be called a common size vertical analysis, common size vertical statement available for comparing with other companies, available to compare for period to period to get an informed decision. You compare it here. You see, you got to see the total assets as those being a part 100%. Now look towards your property plant equipment. It bites or it earns 9.1% of your total assets. Similar way, your intangible earns further balance. That's why it has been promoted towards the first thing. Next, you have a total current assets. Now, my current assets are 69.4 of my total assets. My assets are 100%, and my current assets are being the part 69%. That's why my 31% rounding off, that's my tangible assets, including my intangible assets and some other non-current or tangible assets which company doesn't want to disclose. You need to see and understand these things very deeply. Just wait for a second. You can have a water break. Coming back from a break, now you see you have a liabilities, my total equity and liability. It's being also referred as a 100 percentage, and my liability, including my current liability and my non-current liability, it's being a part as 45.7%. 45.7%. All right. So now you see that your liabilities are just crunching or just earning your assets or your total equity towards 45%. As you remember an accounting equation. See, your total equity, as you see, equity contains some components: return earnings, your paid in capital, your common stock, preferred stock, and then from further things. This was the vertical analysis of your balance sheet. You need to see and understand this. Now we're going to prepare the vertical analysis of an Excel model I showed to you earlier. Here we have a financial statements. I got an income statement, next my cash flows and my balance sheet. We're going to do vertical analysis of a balance sheet. I hope now you understand why I showed to you the Excel working. This will be the part of your learning. You have a balance sheet available in the front that includes your 2021 result and moving forward towards your 2026. This includes your total equity and liabilities as well. How these things gonna relate it from a vertical analysis? That's the major question you need to ask and you need to see it. Let's just start performing our work. We're gonna add a new sheet. For this, I'm gonna refer my workings, Control C, and then I'm gonna add a new sheet. Just wait for a second. As there are already many sheets being inserted, I'm gonna look towards say a new worksheet. Oh, just my sheet is being protected. I just forgot it. But don't see it. Page specials. I only need to add my values. Alt then V or W for view, and I'm going to remove my grid lines. It needs some formatting first. Just give me some seconds and I'll be formatting. Alt H M and then I'm merging Alt H M C. Gonna merge centrally and then I'll be moving forward. Similar way for the balance sheet, I can do it. Alt H MC. My financials gonna be related in the millions. F2 key, I'm gonna remove balance sheet, gonna make it my financial position, just be bolding it, and then we moving. My millions should be bold enough. Then here comes my values. It relates towards my projected and the actual results. Control B, selecting all of them. F2 key 2018 refers towards my actual results. Similar way, go towards A, adding it. Well, previously you can see if I type Alt H, now see under the Home tab, as I click towards my any cell, that would relate its format as well. I'll be turning on my ribbon and just pinning it to show you something very importantly. See here, it being a general referred, then it will be converted towards my text. 2021 is being projected and it's being a, you can say, forecasted result. Similar way it moves forwardly towards 2022 and it is being forecasted, or you can say it's being a projected. 2025 forecasted, similar way 2026 forecasted. These just are my headers, selecting all cells, Alt HB, and now I need to add the top and the bottom border for my years. See assets, current assets, account receivable, total current assets, Control B, Alt HB, and now I need to add a top border, B pressing. Similar way it goes towards my other subtotal as well. Control B, my total assets, Control B, Alt HB. This time I'll be adding top and bottom thick border for my works. I see my financials and how it's speed ups for my workings. Selecting all my cells, pressing furtherly and going towards downward, and I'll be adding a number format first of all. To see it, I have an option to decrease the decimal, but yet two decimal spaces are being perfectly. Similar way it goes towards my liability and equity. My current liabilities, Control B, Alt HB, and adding our top border. Though you can see that some small formatting doesn't require a lot of time, and I'm just formatting it. Control B. Similar way it moves forwardly towards my equity and liability balances. At the end, I told you It should be the top and the thick bottom border. Control B. H. Now see it's being formatted just in a second or in a 2 to 3 minutes. Your financial statement is being formatted and you have its relation in a front. It has been available. Now you would be projecting or working for a vertical analysis. Nextly, we're going to perform the vertical analysis of my balance. So vertical analysis would be majorly working on my projected financials 2021 F. Now look towards furtherly 2022 F. Oh, it just removed it 2021 F. And then I'm gonna look forwardly related equal sign saves my time. Control R. Formula working. You can see till 2026 it has been working. For 2026 you can see it has been working very well. There is no 2027. Now I just see myself back selecting those and making it bold. Control B. Alt H B, and I need to add a top and a bottom border. What is a cash, or you can say as my 100% would be my total assets. Or I guess I can type an 100 as well, making a specific proportion of it divided by my total assets balance. Similar way it will be moving forwardly, going toward the deepness. Control D, and then you would be looking towards a division error. Why there is a division error? You need to understand the things that as I move towards forwardly, it looked towards my numerator that it's being a portion up, but my denominator wasn't being locked up. That's why it changed a line. That's being an incorrect. And to look to overcome this error, you need to select back your cells. You have an F4 key which would be locking your cell. Now you can see the double dollar sign being available under the column header and the rows header. Similar way, I'll be fixing my rows. My column should be turned furtherly. My column would be changing side by side, but my row would be fixing. Enter, and it would be moving forwardly. Control R. Now you see it works perfectly. F2 key. Now you see my formula being working. Selecting my cells, and it should be percentage formatted, decreasing my decimal or increasing. Control B, Alt H B, and now I need to add a top border for this. Gonna do similar way. Net PPE gonna be certain percentage of my total assets. Same way goes for again F4 key. Selecting that and then moving forwardly. Control B, Alt H B P to add top border. This is in 100 percentage. If I add my non-current and current balance, what I got it's being gotten and 100%. Control B, Alt H B, and then I gonna add top and a thick bottom border. Now you got to see the result. Just wait for a second. And yes, you got a vertical analysis along with your projected balance. How has this been working? It's being a part of your financial analysis. Now you got to see it, vertical analysis as well as your projected balance to be shown it. Let me zoom in for a specific percentage. Just wait for a second. Similar way, we're gonna do the vertical analysis for my liabilities and equity. As I told you, That would be certain percentage. Selecting my bank debt revolver divided by my total equity and liability balance. That is 100%. This would be getting my balance F2 key, and again my denominator would be locked up. Yes, my denominator would be locked up, or I can change the columns or the rows, whatever my requirement is. I have my F4 key, I'll be pressing it. Control R, the formula would be working, and then it will be working for my further cells. Control D, similar way, it will be going forward for my deferred taxes. So you can see it is a deferred tax liability. F2 key gonna do same for locking. So dollar sign would lock my rows. Similar way, it will be going forwardly towards my rows. Control R, Control D, my total liabilities. Alt H, and then I'll be making it a percentage. For percentage, I need to press a P for the percentage. Alt H, I want to increase the decimal. It will be asking me to press the 0 for a 1 decimal space. Again, Alt H, and then 0 for the second decimal space. I hope these shortcut keys are very effective for you to be learn it. Just wait for here. I need to make all of these percentage or HP. I'm gonna do same thing for my further steps. Or HP to make a percentage. Now you see rounding off makes something different. Equals, I'm gonna do a sum of my all balances, comma, selecting my balances. Now you see there's a lot of difference. It shows you 200%. You need to understand the things and how things gonna move forwardly. That is your mission. Making it 100%, that's an accurate point. But how do that relate? You need to understand these things specifically. I hope you understand things very well. Each thing should be explained much more perfectly. Now you see, you summed all the things, and that's a very bad thing. You need to see things how these gonna move forward. Understand the things very deeply. Understand the subtotals, how you locate the things. See, you got a total of your liabilities, comma, then you got to see the total of your equity portion. And after locating this, you'll be getting a sum of all your operations and how these operations are linking towards the things. I hope you are understanding the things very well. Control R, Control B, Alt H, B, and then you need to add a top and the bottom thick border just to make the things accurate. I hope you understand the vertical analysis. Now you see the vertical analysis of your work financials, how these vertical analysis relates to your financial decisions. You look towards different things. You have total equity and liabilities. You have your liability portion that is specific to your total balance. Similar way you go towards total liabilities. I hope you understand the vertical analysis and its purpose, how you prepare a vertical analysis that has been performed in front of you. If you look towards further study, how the study is been moving, how you relate the things, here you got to see the income statement. Now, you are looking towards a specific percentage of your revenues and it's being at 100%. Your cost is earning 30% or a biting 30%. You're going to look towards your gross profit and it's 69.2%. Your operating expenses, your total operating expenses are 43% of your total revenue. So your expenses percentage is being a greater percentage. You should take measures to decrease it, to get it to a more specific percentage. Now you see your company is paying much focus on your researches. You are looking towards more focus on the research and development. That's a good thing. You are doing a good thing, but you need to see that you are earning less than your expenses. Similar way, you got to see some operating income and your on operating expenses or gains and a loss. Now you see it has been lost on your sales for both of the year. Take a decision. You got a positive EBT, EBIT, and that's a 24%. It's a healthy indicator. But look at the top. Your indication that your cost is 30% needs an alarming situation. Similar way, your research is being more. You need to see the financials. You need to ask your research department. Your net income is only 15.4%. You need to see that why it's being 15.4%. I hope you are working, you're understanding the things side by side with me and how these things relates to your understanding. We're gonna do it for you. It's time to look toward insightful income statement vertical analysis. Previously, we looked forward towards our vertical analysis of a balance sheet or a statement of financial position. Now we're gonna do the working for an income statement. As you see my gross revenues and onto the vertical analysis, my revenues would be 100%. Now just see the things how we're gonna move forward. So your net revenue it should be the 100 or 100%, whatever you suggested. Control R, and what is the specific percentage of my revenue I want to see it. My gross revenue it's gonna be divided by my net revenue to look the things forwardly. F4 key to lock my row, but column should be changing side by side. Control R, Alt H, P to make it percentage. But as you see, it has already been made towards a percentage greater than 100. We need something into the formula for the working -1. Now you can see it's 100. That's an issue, or you can do something betterly. Let me going back, and then we got to see the freight cost as well. Alt H and P making it towards the percentage. Now you see you got a different stage Alt H and now need to see some further formatting. FM you have a thing selecting the percentage and then you going if you look towards a custom there would be a similar type available for the percentage.
Yet there's no being format available for a negative percentages, but for that I need to make the things. I'll be adding a format laterally plus to make the things. Accurate control B, Alt H, B, and then adding a top order. Similar way, my all of the costs would be specific percentage of my revenue to cover the vertical analysis. The cost is breaking much. It is eating a lot of my net revenue. Is equal to sum to get a total cost percentage. Control R, Alt H, B, P, and then bold it. We're gonna look toward the cost adjustments, whether there are any gains or losses. You ought to see some further things. Here you got an EBITDA analysis. By the way, it's just an EBITDA margin. Similar way towards my depreciation. As you know that depreciation is being based on your financials, on your, you can say, the historical values or a forecasted values of your property plant equipment. Sometimes you look toward the net property plant equipment and that's how you predict it. At the time we are preparing the vertical analysis, we're going to look toward a specific percentage of my net revenue. How much depreciation is eating my dollar balance. So it is 7.21. It shouldn't be bold. Arrive my EBIT. If I see my EBIT margin, how does it relates to my net revenue? You need to see the things. Gonna do the same thing for my workings to see a check balance. Now see you got an accurate result. Deleting it. My interest. As interests are being based on my debt's value, you need to consider the debt closing or opening balance, whatever the company policy suggests. My quick access toolbar has been opened. Equals my EBT margin. increasing the decimal to the two spaces, adding a borders, making it specific side by side, Alt HB, and now I need to add an outside borders. Total taxes proportion towards my net revenue. And here we arrive towards my net income margin. These are some of the profitability ratios as well. And then we have some current taxes working. Lastly, looking towards my deferred taxes. And yes, I got to see my net revenues. And if I make towards the sum of my taxes, how does it relate towards my working? You got to see the same things here. Just to see the things completely formatting, it doesn't require some sort of time. Now you see, you completed an income statement vertical analysis as well. We completed the textbook example as well, and we looked down, we understand some EBT workings. We look toward comparative financial analysis. It explains us that it has a vertical and a trend or an horizontal analysis. Yet we're gonna look towards an horizontal analysis. We worked on vertical analysis, similar example. Samely, we're gonna work furtherly for a bit. We worked on an operating income. We understand the similar ways we look towards EBIT, EBTs, some income measures. We look towards a multi-step and income statement. Here it's in front of you. If you have any question, you have a chat box available and furtherly WhatsApp number for a confirmation for a preparation as well. At the next thing, we're gonna look towards our horizontal analysis. Here I got to see my horizontal, or you can say it's a trend analysis. If I see that, it says horizontal trend analysis is used to evaluate trends for a single business over a period of several years. So, mainly, you look towards working for your, you can say, trendly for your year over year growth and how that has been related towards your business perspective. And analyzing income statement, changing in revenues or in expenses, all right, we change revenues or expenses over the time, which indicates positive as well as the negative balances. For example, it explains you effectiveness of a company's in a changing price strategy or its effort to improve operations. In analyzing the balance sheet, we change the assets and liabilities to look towards our liquidity position as well as solvency position. Horizontal trend analysis can be in the form of common base year, as we can make a base to 20x3, 20x2, 20x1. We can make a base as a 20x1 and then compare year over year. Over it, we have a 20x2 as well for a yearly comparison. It says furtherly, base year. Base year financial statements used for index number analysis in a first year presented as a base year. Financial statements amount for subsequent year are presented not as monetary amounts but as index number relative. So you got an index working for a relative, but that is not a moment that you're gonna look towards a percentage or a changing value for the next thing. This whole thing would be workable, would be understandable when you're gonna prepare the vertical analysis. Here you got a formula that a base year analysis equals to current year balance divided by base year balance multiplied by 100. You have another formula to look towards a growth that is being a division, or you can see the similar way of working, only there's a change that it doesn't show the percentage sign. You only need to assume that it's being a percentage current year minus or divided by previous year minus 1 into the 100 percentage. It relies towards our growth. It explains you horizontal analysis can also be done as a variations analysis in a form of presentation of an annual growth rates of individual line items. So we would be looking towards annual growth and it relates towards my individual line items and how these gonna be relating. For each line item, either on an income statement or the balance sheet, percentage of change of year over year is calculated by dividing current year line item by previous year line item, subtracting minus 1 from a quotation from a bracket values and multiplying with the resulting with the percentage to convert it into the percentage. It has been explaining you the formula working and how this formula gonna relate it. Here you have an example. It says my net revenues in the year 23 is 8,000, then 2022. You can explain 1110 or you can explain as 11,100 and similarly 9,900 for the year 20x1. How you analyze furtherly, you have 8,000 current year. You took a base, that base is second year for a third year calculation and you got a negative growth. But if you see towards 20x2, it shows towards the positive growth. Year 20x1 has no base for the previous year, then that's why it has been shown as a balance. It says introduction towards financial ratio analysis. Wait a second. Before moving forward towards our liquidity, solvency, residual risk, and profitability ratios, we're going to work on an horizontal analysis. Vertical analysis, and then we're going to prepare horizontal analysis. How do I relate the things of an income statement? It showed the reference error because I was referring the name. How do my gross revenues have been projected as a base year 2020 with the 2020 19 and then minus 1 to get my appropriate result. Similar way, I'm gonna move forward my formula working. Shift and right arrow key from a keyboard. Control R to get a result. Alt H B. Add a top and the bottom border. Horizontal analysis. Alt H and then I would be aligning it centrally. Alt H and then making it towards a percentage. You look toward the gross revenues and the freight costs, then your net revenues, there's some extra workings, and this is the way how you perform the horizontal analysis. I hope you are learning effectively side by side with me how the horizontal analysis is being performed. Making towards your base workings, current year divided by last year minus 1, and then you got to see your workings. Taking 2019 as a base year for the start. I hope you have understood these things very interestingly and you would be practicing horizontal analysis. Thank you for attending this session. You would be looking towards financial ratios as well.